Hey there, everyone. Welcome to Ainslie's Gold Silver Standard Insights. And if you're new to the show, welcome too. This is brought to you by goldsilverstandard.com and ainslieBullion.com.au. I am your host, Joe. Now, as usual, we have Chris Tipper here to break down the morning's news posted on the Ainslie website. And joining Chris today is regular contributor Alex Hutchinson from Siltec Precious Metals. And today's topic is all about food inflation, why, and when will we see an end to it? So welcome to the show again, Alex, and Chris, over to you.
Thanks, Joe. Well, this week will be all about the Fed and their upcoming decision on the size of the next rate hike. It's baked into expectations that it will be 0.75%, but volatility indicators are increasing to the level where it appears that regardless of what they actually do, there'll be fireworks and the markets will move. When the numbers are watched so closely and so widely, it creates a situation where even doing exactly what was expected results in a significant market response, one way or the other. Obviously, underlying all of this volatility are the inflation numbers, as they ultimately will determine what the Fed does now and continues to do in the weeks and months ahead. The market's always looking forward, so we'll be quick to move at any sign of trend change. But with the disappointing CPI result last week, it seems like we can continue to expect more pain for at least a little bit longer. A key part of what made the markets respond so badly to those latest numbers was the fact that the prices for everyday items such as food continued to rise a lot more than people had hoped. This was a topic that Alex completed a deep dive on for us in the news piece published today. So it's great to have you back with us to talk through some of what you found there. So thanks for that insightful article today, Alex. But let's start by looking at some of the specifics around the food inflation numbers that you mentioned. We've been going on about inflation generally for a while, but only now it seems like food inflation is becoming the topic we need to be thinking about. Why is it only just showing up on our radars now?
Oh, well, thanks for having me again today, Chris. And I had a really good time looking into all of this. So I think last time we did identify food as being a particular issue for inflation with climate change and stuff like that. So it was good doing a deep dive today. So looking at what you're talking about, energy prices started lifting in around November 21 and they peaked around April 22, but they're really holding very high. So, have we seen the peak? Don't know. These energy prices feed directly into farming inputs like fertilizer, transportation from farms, and just gas to run glass houses is a huge expense for farmers. But plants take months to grow. They're sown and then they're harvested. You buy the inputs. So this cycle means that, call it a 6-month cycle. The current food prices are really only just coming from energy prices that we saw back in March. So we're just going to continue to see high inflation numbers in food. Now, when you consider that most CPI baskets around the world are heavily weighted for food, US is 16%, Germany is 11%, Australia is 17%. Now, the fact that food inflation in the US ran the other day at 11.4%, but overall inflation was 8.3%. These high food numbers are just going to hold the inflation numbers higher for longer. And then what we spoke about in the article today was the fact that the US dollar is appreciating against all currencies. Australia is actually faring fairly well at the moment with only sort of 10% depreciation. So if the US
only 10%.
Sorry?
Only 10%.
Only 10%. So, you've got these other currency. If the US food inflation's running at 11%, this is just pushing even higher inflation figures onto the rest of the world because food is a commodity and it's traded in US dollars. So there's a lot of pain.
I just think that when you put all of that together, what's sort of getting me or catching me a little bit off guard is it's a very specific type of inflation that you're talking about, isn't it? What did you find when you were doing the deep dive around all the different factors impacting this big picture and what that means for the US and world economy? Because to me, it seems like it's not necessarily quite the same story. I know you're talking about parts of energy and things we've talked about in the past being involved in it, but this seems like something a little bit different to me.
Well, there's a few things. So we've obviously spoken about the inputs. You've also got the Ukraine war. Back in June 2022, Russia had blockaded about 20 million tonnes of wheat coming in onto the world market out of Ukraine. Secondly, thirdly, actually, this one I found really interesting was the depreciating currencies worldwide are actually causing a lot of issues as well. So looking at Argentina, about 7 days ago, they implemented something called the soy dollar. Now, what had been going on in Argentina is farmers, because the Argentinian peso was depreciating so much, farmers didn't want to sell their crops. So they'd just be bagging all their soy and putting it in storerooms. Right. So what the Argentinian central bank turned around and said they desperately needed the currency, the foreign reserves. They said, we will give you 200 pesos for every US dollar when the current foreign exchange is 142, just rewarding them.
That's a massive premium.
Massive premium. And so what's actually happened in 7 days is 15% of the Argentinian soy stockpile has now been sold onto the world market. Now, that will help with inflation, but it's just what a depreciating currency does. Now, the fourth thing, which we've also touched on for food, is climate risk. So China's just come out of a massive drought, but in India, 7 days ago, again, they've just enacted a restriction on rice exports. So they've had a terrible season because of monsoon. So they've now got a 20% export duty on rice. So because they just can't afford to get rid of it.
Well, I suppose you've got to look after the people at home first is probably how they're looking at it, isn't it?
Yeah, so it just means there's so many external factors that the Fed cannot control. It's war, it's climate, it's depreciating dollars, and it's these input prices from energy that are only just feeding through.
So when you say all of that, and against that backdrop where you're saying really they don't have a lot of control, where does this leave us in terms of the only tool that the Fed really has? Let's face it, the only tool in their arsenal is raising rates. Of course, we're expecting to see more of that this week, but will a rate rise at this juncture actually work at all to curtail this particular type of inflation? Because the factors you're talking about, I don't know, does a rate rise do what it's supposed to do in that scenario?
Well, what it's probably going to do this time is it's going to exacerbate the whole situation.
Make it worse, right?
Yeah. So if I'm a farmer and I'm looking at wheat prices today and they're triple what they were 3 months ago, and I've got to plant my new crop, but now my inputs are 3 times as high. So I've got to buy new seed and I've got to buy a new tractor. I'm now paying more for a loan to do it. So the Fed's raised interest rates. So I now am paying 1% more than what I was paying on my last loan, or I might choose not to do anything. So what this might do is it might mean farmers choose not to produce anything for a season, and that's just going to exacerbate this even more.
Right. That's not a pretty picture. But once again, you've left me with a lot of new information I didn't know previously, particularly things like that soy dollar. That's brand new information to me. So really useful. So thank you once again for taking the time to do that deep dive and helping us put a little bit more of these pieces of the puzzle together. So yeah, thanks a lot for that, Alex.
Oh, thanks for having me, Chris.
All right.
Thanks again, Alex, for being on the show. We love having you on. And Chris, as always, I'll see you on the next GSS Insights. Now, if you would like to continue the conversation, head over to the Discord channel, which is discord.gg/gold. And Chris will be on there for the next 1 or 2 hours after the upload of this video to YouTube. So it's definitely a place you want to be with like-minded individuals. I'm always going to ask you to head over to youtube.com/Ainslie Bullion to hit the big red subscribe button, and also check out goldsilverstandard.com. That's it for another GSS Insights. As we always say here, balance your wealth in an unbalanced world. Take care, and we'll see you soon.